Hello, guys. This is the last part of our discussion on the amendments applicable to CA Inter Income Tax May 2023. Now, before this, we've already seen 4 videos across which we have covered the amendments applicable to the basic concepts, heads of income, Chapter 6A, as well as amendments applicable to TDS and TCS. In this video, our focus is going to be on the amendments applicable to assessment procedures. This video might be slightly lengthy because through this session, I also want to give you a small revision on 234 ABC interest because over my experience, I've seen that students compromise a lot when it comes to 234 ABC calculation, and from the MCQ perspective especially, 234 ABC might be a hot question in the examination. See, no doubt, today 234 ABC is automated. All right. I mean, if you look at how the interest is calculated in practical situations, softwares are available, formula are available. Just have to key in the numbers and you get the interest calculations. But then, from our examination perspective, 234 ABC calculations you should be good at. All right. So with that objective, even 234 ABC we will cover through this video. Alright, now first let us finish off the simpler, smaller amendments, and then we will go to the big, huge amendment of updated return, through which 234 ABC also we will revise. Listen, talking about the very first amendment, the first amendment talks about assessees who have to file income tax return. See, we already have a provision which says that if my assessee happens to be a company, then irrespective of the income, the assessee has to file the income tax return. Similarly, if my assessee happens to be a firm or if it happens to be an LLP, then irrespective of the income of the assessee, it is mandatory for this assessee, it has to file its income tax return. But if my assessee happens to be an individual HUF, AOP, BOI or AJP, then there are some specific situations. Only in those situations we ask the assessee to file his income tax return and not in other situations. Now, what are those situations? See, I'm talking about the existing provision with you first, and then I will tell you what the new addition is. Alright, so the existing provision says company, firm, LLP, it is mandatory. They have to file their income tax return. It is mandatory. But for individual HUF, AOP, BOY, AJP, we have some situations. Now, what are the situations? Let us go through them one by one. The first situation, you will look at the GTI of the assessee. GTI is without considering Chapter 6A. To the GTI, you add back the exemptions which the assessee has claimed in the 54 series, like 54, then 54B, 54D, 54EC, 54F. All these capital gains exemptions in the 54 series, you add it back. You find the net number, the total after adding back. If it is more than basic exemption limit, then your assessee will have to file income tax return. Situation number 2. If your assessee, being individual HUF, AOP, BOY, AJP, is an ROR and has an agent outside India, or your assessee being any of these is an ROR and has an asset outside India, even in this situation, the assessee will have to file his income tax return. Now, in this situation, I will not bother about the income of the assessee. Irrespective of the income, this assessee will have to file his income tax return. Okay, then talking about the third situation, we will see what is the total amount that this assessee has deposited in the current account. What is the total deposit of this assessee into the current account? If that total deposit is more than 1 crore, then irrespective of the income of the assessee, he has to file his income tax return. Then talking about the fourth situation, this time I will look at the total electricity expense. If the total electricity expense of our assessee is more than 1 lakh rupees, again irrespective of the income of the assessee, he has to file his income tax return. Then in the next situation, you will look at the total expense which the assessee has incurred on a foreign travel. See, it is not necessary that he himself should be traveling. Anybody may be traveling, but he should be spending on the foreign travel. And how much did he spend? More than 2 lakhs he spent. So these are the existing provisions that if my assessee is a company firm LLP, irrespective of the income, that assessee will have to file his income tax return. But if my assessee is individual, HUF, AOP, BOY, AGP, only if the assessee falls under any of these situations, only then the assessee will have to file his income tax return. First situation, total income. I'm ignoring chapter 6A. I'm ignoring 54 CD's exemptions. The balance is more than basic exemption limit. Assessee will have to file income tax return. Second situation, my assessee is an ROR, has an agent outside India or has an asset outside India. Irrespective of the income, he will have to file his income tax return. Third situation, total deposit in the current account is more than 1 crore. Fourth situation, total electricity expense is more than 1 lakh. Fifth situation, the total foreign travel expense is more than 2 lakhs. Any of these situations, attractive guys, irrespective of the income, this assessee will have to file his income tax return. Now, in addition to these 5 situations, one more, or I would say 5 more situations have been inserted in the Act. Okay, when does an individual HUF, AOP, BOY, AJP have to file his income tax return? New situations have been added. What are the new situations? Listen, if your assessee is carrying on a business, okay, and if the total turnover of this business is more than 60 lakh rupees in the previous year, see over here, all the data like 1 crore in the previous year, total electricity expense more than 1 lakh in the previous year. All these numbers are applicable for the previous year only. It is obvious, right? So in our new situations, in our 6th situation, the assessee is carrying on a business and the total turnover of that business is more than 60 lakhs in that year. Or situation number 7, this time the assessee is carrying on a profession, okay, and the gross receipts of this profession are more than 10 lakh rupees. In such cases, assessee has no choice. Assessee has to file his income tax return. Then talking about the 8th situation, I'm talking in the 8th situation only about my senior citizen. In the 8th situation, I will look at the TDS and TCS credit of my senior citizen. So 8th situation is applicable only if the assessee happens to be a senior citizen. If his TDS and TCS credit is at least 50,000 rupees in that previous year, then that assessee, irrespective of other information, he has to file his income tax return. Situation 9 talks about assessees who are not senior citizen. If their TDS and TCS credit put together is at least 25,000, then they have to file their income tax return. And lastly, in the 10th situation, if my assessee's total deposit, aggregate deposit in all his savings bank account, see, I may have a savings bank account with several accounts, with several banks. I may have a savings bank account with HDFC Bank, with IDFC Bank, with ICICI. I may have a savings bank account with several banks. All the banks put together, I will look at how much total deposit did I put into all these banks put together. If the aggregate is at least 50 lakh rupees, then I will have to file the income tax return. Understanding? And did you notice? Everywhere I spoke about more than. Did you see the sign? Only in the last 3 situations we put at least. Current account more than 1 crore, but savings account at least 50 lakhs. So these are the new situations. So now out of these situations, we have 10 situations now. So out of these 10 situations, if any of the situations is attracted, then the assessee will have to file his income tax return. Okay, earlier we had only 5, now we have 5 more. What are the new ones? If the assessee is carrying on a business and the total turnover of that business is more than 60 lakhs, or if the assessee is carrying on a profession and the gross receipts of that profession is more than 10 lakhs, or if assessee is a senior citizen and his TDS TCS credit of that particular year is at least 50,000, if assessee is not a senior citizen, TDS TCS credit of the previous year is at least 25,000, and the total deposit in the savings bank account. See, initially we spoke about current account. Now, savings bank account is at least 50,000, or at least 50 lakhs. Alright, current account, the number is 1 crore, and savings account, the number is 50 lakhs. But current account, the sign is more than 1 crore. In savings account, the sign is at least 50 lakhs. Got it, guys? Simple. This was our first amendment where we're adding 5 new situations. In these 5 situations, irrespective of the total income of the assessee, he will have to file his income tax return. If he's carrying on a business, total turnover is more than 60 lakhs. If he's carrying on a profession, total gross receipt is more than 10 lakhs. If he's a senior citizen and TDS TCS credit is at least 50,000. If he is not a senior citizen, TDS TCS credit is at least 25,000 and his total deposit into savings bank account is at least 50 lakhs. First amendment clear? Now listen, I'll take you to the second amendment. The second amendment talks about situations where our assessee will require PAN. See, we already have several situations where our assessee needs a PAN. Like, for example, if your assessee's total income is more than basic exemption limit, he should have a PAN number. If the assessee's turnover from business is more than 5 lakhs, he needs a PAN number. So we already have several classes, several situations where our assessee has to make an application and get a PAN number allocated to him. Now we are learning some more situations where PAN is mandatory. Listen, if my assessee intends to do indicates what? He wants to do. He hasn't done the 3 things till now. He is about to do the 3 things. He wants to do the 3 things. Then listen, assessee, before you do these 3 things, wait, go to the AO, fill in an application form, get a PAN allocated, and then do these 3 things. Understanding? Listen, assessee, if you want to do any of these 3 things, thing number 1, thing number 2, thing number 3. If you want to do any of these 3 things, first you fill a PAN application form, get a PAN allocated. They will allocate the PAN to you within 7 days. You get the PAN allocated and then only do these 3 things. What are the 3 things? If you want to deposit cash into your bank accounts, or if you have an account with a cooperative bank or with a post office, and the total cash that you want to deposit in these accounts is at least 20 lakh rupees. In simple words, total cash deposit you want to do is at least 20 lakh rupees. Or you want to withdraw cash. You have an account with a bank, you have an account with a cooperative bank, you have an account with a post office. And from here, you want to withdraw cash in such a way that total you want to withdraw at least 20 lakhs. Or you want to open a current account or a cash credit account, overdraft account, CC account and all if you want to open with a bank, cooperative bank or post office. Any of these 3 things if you want to do, wait, do you have a PAN? If you have a PAN, great. If you don't have a PAN, please fill in PAN application form and get a PAN allocated. You have to submit the PAN application form at least 7 days before you intend to do the transaction. That is, when do you want to do the transaction? Before that, leave 7 days. Even before 7 days, you should have submitted the application to get the PAN allocated to you. Simple, guys. Yes, so 3 things. Number 1, you want to deposit cash, at least 20 lakhs. Number 2, you want to withdraw cash, at least 20 lakhs. Number 3, you want to open a cash credit account, you want to open a current account. Any of these 3 things if you want to do, if you don't have a PAN, 7 days before you want to do this itself, before 7 days itself, you should have submitted a PAN application form. Alright, then you should also make sure that you mention your Aadhaar number and PAN number in documents relating to such transaction. See, when you want to do this transaction, 7 days before that, you have submitted application form. You will get the PAN number, only then you will do the transaction. When you do this transaction, you will have to fill some form. Like if you want to open a current account, you'll have to fill some form. In that form, you have to mention your Aadhaar number or your PAN number. See, earlier under income tax, PAN was under income tax earlier, PAN used to be our identification number. But today, PAN and Aadhaar are both being used interchangeably as far as it concerns Income Tax Act. So for these 3 transactions, whenever you will be filling the form, in that form you have to mention your Aadhaar number or your PAN number. The bank, the cooperative bank, and the postmaster of the post office, even he will make sure that on the document you have mentioned your PAN number. He will make sure that it is quoted and authenticated. Simple. So the first amendment spoke about additional few situations where you will have to file your income tax return irrespective of what your income is. In these situations, you will have to file your income tax return. The second amendment is about PAN application. If you want to do any of these three transactions, and if you don't have a PAN number already, you have to first submit a PAN application form, get a PAN number, only then do these three transactions. What are the three transactions? You want to deposit cash at least 20 lakhs, you want to withdraw cash at least 20 lakhs, or you want to open a current account or a cash credit account. Whenever you want to do this transaction, before that, leave 7 days. Even before 7 days, you should have submitted PAN application form. Then, to do these three things, you will be filling a form. Like to open the current account, you will be filling the form. In that form, you have to mention your PAN number or your Aadhaar. Fine, guys, simple. So this was our second concept, a second amendment relating to assessment procedures. Third amendment is updated return. We'll come to this at the end. Let us finish off the other small amendments. The last date to link your Aadhaar to your PAN is 31st March 2022. They have been extending it over and over again, and the last extension was till 31st March 2022. If you do not link till 31st March 2022, then 234H fees will get attracted. See, let me give you one small revision before we proceed forward. 234A is interest if you do not file your income tax return on time. 234B applies when you pay less advance tax. 234C applies when your advance tax installments are not proper. 234D is not a part of your inter-syllabus. You will be learning it in a CA final, where you will talk about income tax department giving us interest on refunds. Okay, 234D is interest on refunds, not a part of our syllabus. 234E is when you don't file your TDS TCS return on time. Then you will have to pay a fees, that is 234E. How much is the fees? You will have to pay a fees of 200 rupees per day of delay, that is 234E. Delay in filing TDS TCS return. 234F fees is when you file your income tax return late. So when you file your income tax return late, 234A interest and 234F fees gets attracted for the same default filing your income tax return late. Now 234H. 234H is what we're discussing about right now. This is applicable when you do not link your Aadhaar with your PAN. See, the last date to link your Aadhaar with your PAN is 31st March 2022. If you do not link by 31st March 2022, then 234H fees will get attracted. If you link after 31st March 2022, that is 1st April 2022 onwards, if you link, then the fees will be attracted. How much is the fees? We will see when are you linking your PAN with your Aadhaar with your PAN. Did you link it after 31st March 2022, but by 30th June 2022 did you link? If yes, you will have to pay only 500 rupees 234H fees. But if you linked after 30th June 2022, in that case, any time after 30th June 2022, you will have to pay 234H fees of 1000 rupees. So when is 234H fees attracted? This is attracted when you do not link your Aadhaar with your PAN. You're supposed to link by 31st March 2022. After 31st March 2022, if you're going to link, you will have to pay this fees. How much is the fees, guys? 500 rupees if you're linking at least by 30th June 2022. And after that, if you're going to link, it's going to be 1000 rupees. Now, in case by till 31st March 2023 also, if you did not link, then it will become a little serious. Actually, you're supposed to link till when? 31st March 2022. If you don't link till 31st March 2022, but at least if you link after that, you will have to pay fees. 500 rupees fees till 30th June. After 30th June, 1000 rupees. But till 31st March 2023 also, if you don't link, then your PAN will become inoperative. Your PAN will become inoperative with effect from 1st April 2023. Are you understanding how serious the matter is? If you are linking, ideally you should have linked by 31st March 2022. Your Aadhaar with your PAN, you should have linked by 31st March 2022. Then it would have been perfect, no implications at all. If you're linking after 31st March but before 30th June, 500 rupees fees, story over. If you're linking after 30th June, 1000 rupees fees you will have to pay. But till 31st March 2023 also, if you did not link, then on 1st April 2023, your PAN will become inoperative. Now, if PAN becomes operative, there will be a lot of consequences. Your assessee will not be able to file his return. His pending returns will not be processed. His refunds will not be issued. All his KYC, wherever he has to give KYC documents. Whether you want to, take a credit card today, from applying for a credit card, opening a bank account, opening a demat account, everywhere today you have to give your PAN number. So if your PAN becomes inoperative, none of these things you will be able to do. Tax will be deducted at a higher rate, 206AA, 206CC, which I taught you in the last amendments video. That will start applying. So there will be a lot of severe consequences if your PAN becomes inoperative. Your defective returns cannot be processed. Your pending refunds will not be processed. Your pending returns will not be processed. So you are supposed to actually link Aadhaar with PAN by 31st March 2022. If you don't link Aadhaar with PAN, then you will have to pay 234H fees, which will be 500 rupees if at least you're linking by 30th June, 1000 rupees if you're linking after 30th June. But even by 31st March 2023 also, if you have not linked, then 1st April 2023, your PAN will become inoperative. Once PAN becomes inoperative, a lot of consequences will arise. Alright, and so this was our next amendment under assessment procedures chapter. One small point before I take you to updated return now. AMT rate is generally 18.5%, right? AMT rate and alternate minimum. But if your assessee is a cooperative society, the AMT rate will be 15% and not 18.5%. AMT is applicable to everybody other than companies. So if for all other assessees, it's going to be 18.5% only, no change. For cooperative societies alone, the rate has been reduced to 15%. So what are the amendments that we have seen in assessment procedures until now? Number one, we said extra points relating to assessees who have to file their income tax return. Then we saw some more situations where assessee has to file an application form and get PAN allocated. Then after this, we saw about Aadhaar linking with PAN. And finally, we discussed that AMT rate for cooperative societies and only cooperative societies, not others. For others, it is still 18.5%. For cooperative societies alone, it has reduced to 15%. Coming to the next amendment now, we are going to be learning about updated return under section 139(8)(e). This is a totally new concept which has been included in your syllabus, a new subsection which has been brought in by Finance Act 2022. Alright, let us go through this concept by concept, point by point, and let us gain expertise over here. And then at the end, we will, try to solve some 2 questions with also 234 ABC involved, so that we can get a 360-degree view of the entire concept. Alright, let's begin. So 139(8)(a), this is talking about something called as updated return. So first of all, who can file an updated return? See, any assessee can file an updated return. You can be an individual, you can be a HUF, a company, a firm, an LLP, an AOP, BOI, anybody, any kind of a person can file updated return. There are 2 situations when you would want to file an updated return. What are the 2 situations? Listen to me. In the first situation, your assessee has not filed income tax return as per section 139(1) due date. We have 139(1) due date, right? July 31, October 31, November 30. Within that due date, he did not file his income tax return. Let us say I'm talking about previous year 22-23, assessment year 23-24. So what would the 139(1) due date be? Either it would be 31st July 2023, or it would be 31st October 2023, or it would be 30th November 2023. But whatever is the due date out of the three which is applicable to your assessee, he did not file his income tax return within that time. But no problem, assessee, you have some more time. You have time under section 139 subsection 4 also. You can file belated return. How much time do you have to file belated return? From the end of the assessment year. What is the end of the assessment year? 31st March 2024 less 3 months. You have time till 31st December 2023 to file belated return. But lazy assessee, even till 31st December 2023, he did not file his income tax return. So even 139(4) time limit is over. Now he is waking up. Now he is wanting to file his income tax return. No other choice. He has to come under section 139(8)(a) now. So first situation, guys, neither did he file his income tax return on time, nor did he file the income tax return late. Time to file belated return also is over. And now he wants to file income tax return. Come assessee, welcome to section 139(8)(a). Under 139(8)(a), you can file return. Now, even though 139(4) time limit is over, even though time to file the late return is over, after this, now if you want to file the return, it has to be 139(8)(a) return only. For 139(8)(a), but how much time do you get? From the end of the assessment year. What is the end of the assessment year? 31st March 2024. From the end of the assessment year, you will get 24 months more. 24 months means till when? Till 31st March 2026 you will get time. You will get time for 24 months from the end of the assessment year to file your updated return. This is definitely a favor which the income tax department is doing on the assessee. You did not file return within 139(4) time limit also. Now, if you do not file the income tax return, what will happen is income tax department will impose severe penalties and punishments on you, because it's as if you tried to hide your income. It's as if you did not want to file your income tax return. So huge penalties and punishments will be put on you. So to escape from that, we are giving you one last opportunity. You did not file within 139(4) time limit also, no problem. We are giving you one last opportunity. At least file updated return within 24 months from the end of the year, end of the assessment year. Understanding, guys? So this was the first situation where you did not even file the income tax return, not even within 139(4) time limit. Now coming to the second situation. In the second situation, assessee did file his income tax return either within the 139(1) due date or within 139(4) time limit. Either one of them, okay, either on time or late, but within 139(4), he did file the income tax return. But now he's realizing, oh God, I made a mistake. I forgot to put this income in the return. He wants to revise the return. Section 139 subsection 5, he wants to revise the return. But even to revise the return, you have a time limit. What is the time limit? 3 months from before the end of the assessment year. End of the assessment year, 31st March 2024. 3 months before that will be what? 31st December 2023. So to revise your return, you have only so much time, but even this time is over. 31st December 2023 is already over. Now even time limit to revise under 139(5) is over. Now you want to revise. After this, if you want to revise, you have no option. Again, you will have to revise only through 139(8)(a). Again, 139(8)(a), how much time will you get? You will get 24 months from the end of the assessment year. So 31st March 2024 plus 24 months, you will get time till 31st March 2026. Understood, guys? So first you try to grasp till here that when can your assessee file the income tax return? Number one, he can file the income tax return when can he file income tax return, updated return under 139(8)(a). Number one, 139(1) time limit is over. 139(4) time limit is also over. Time limit to file belated return is also over. And after that, if he wants to file the income tax return, no choice, updated return only. Similarly, he has already filed the return, either under 139.1 or under 139.4, he has filed the return. But he wants to revise the return, time limit for revision is over. After that, if he wants to revise the return, it has to be through 139.8A only. It has to be through updated return only. Okay, so first of all, you have understood what are the two situations where updated return can be filed. See, within 24 months from the end of the assessment year. Who can file? Any person can file. But there are some cases where you cannot file an updated return. See, updated return cannot be a loss return. Let me explain this to you over here with the help of some situations. See, let us say you have already filed the return, okay? You already filed the income tax return. This was a loss return. You already filed it. You want to revise it. Time limit for revision under 139.5 is over. After that, now you want to revise. So we will, so you have no option. You have to revise only under 139.8A. You have to file updated return only. Under 139.8A, if you are filing a return, it cannot be a loss return. You cannot declare more loss through 139.8A. You also cannot reduce the loss through 139.8A. Through 139.8A, you can only declare income. You want to revise the loss return that you have filed? Are you ready to make it income return? If yes, then you come to 139.8A. If even after 139.8A, if it's going to be loss return only, whether more loss, less loss, if it's still going to be loss return only, don't come to 139.8A. Understanding 139.8A can be only an income return. It cannot be a loss return. So if your original return is loss return, either you have to convert it into an income return and then you file it under 139.8A. But if you are going to file under 139.8A also a loss return only, that I will not allow. That the department will not allow. So under 139.8A, you can neither reduce the loss nor can you forget about increasing the loss. You cannot reduce the loss also. If you are going to declare income instead of loss, then you can do 139.8A. But if you are going to still declare loss, you cannot come under 139.8A. Understanding. Then situation 2. Because of your updated return, it should not result in a refund to you. Your refund should not increase. Let us say you already filed income tax return. In that, refund that was due to you was, let us say, 1 lakh rupees. Now you're filing updated return under 139.8A, let us say. You wanted to do some revision. Time for revision under 139.5 is over. So you're filing updated return under 139.8A, let us say. Now under this updated return, your refund cannot become 1 lakh 20. See, simple logic, guys. Because of updated return, the government should benefit. It shouldn't be that government is losing because of updated return. Because of updated return, if the government has to give you a refund and all, don't come to 139.8A. So first point, 139.8A cannot be a loss return. If your existing return is a loss return, then if you want to file 139.8A, you can file only if you are willing to make it an income return. Even if you're going to reduce the loss, don't come to 139.8A. If it's going to be a loss return, 139.8A will not be allowed. Situation 2, I told you, because of 139.8A, the refund which we have to give you should not increase. Understanding, the refund should not increase. The refund should because of 139.8A, income tax department should not suffer. You're understanding, the refund should not increase. Also, in situation 3, let us say you already filed income tax return and according to that, your tax liability was 1 lakh. Now, because of 139.8A, let us say you wanted to revise the return, 139.5 time limit was over. So under 139.8A, you decided to file updated return. Now your tax liability cannot be 80,000. Your tax liability cannot become lesser. Your refund cannot be more because of updated return. Understanding, guys? So point number 1, your updated return cannot be a loss return. Point number 2, because of updated return, your total tax liability cannot decrease. And point number 3, because of updated return, the refund which the department has to give you cannot increase. End of the day, because of updated return, the government should benefit. Understood, guys? Then listen to the next point. If the carried forward loss or unabsorbed depreciation is to be reduced for any subsequent previous year as a result of furnishing of updated return of income for a previous year, an updated return is required to be furnished for each such subsequent previous year. We'll take an example. Look at this. Let us say for previous year 21-22, assessment year 22-23, you had filed the income tax return on time within 139(1) due date. On 1st July 2022, you had filed declaring business loss of 5 lakhs. Okay. I hope you remember you can carry forward losses only if you file the return on time. Only loss from house property and unabsorbed depreciation, unabsorbed capex on scientific research, unabsorbed expenditure on family planning, only these expenses you can carry forward even if you file a late return. But otherwise, if you want to carry forward losses, you have to file return on time. So because it was business loss, assessee wanted to carry forward the loss. This is not house property loss. This is not unabsorbed depreciation, unabsorbed capex and all. So that is why you have to file the return on time. Only then you can carry forward. Assessee filed the return also on time. Assessee declared a business loss of 5 lakhs. Okay. But then later, on 1st November 2024, assessee is realizing I made a mistake in this return. Assessee wants to revise. But 139.5 time limit is already over. 139.5 time limit will be 3 months before the end of the assessment year. That is 31st December 2022. But 139.5 time limit is also over. Okay, on 1st November 2024, he wants to revise. So no option. You can come only through 139.8A. Now, 139.8A time limit we have till when? 24 months from the end of the assessment year. So for assessment year 22-23, you will have time till 31st March 2025 to file updated return, right? So within that period, on 1st November 2024 itself, assessee wants to revise, but revision he cannot do because revised return time limit is over. So he is trying to approach 139.8A. 139.8A I will allow because earlier it was loss return, but through this updated return, he wants to declare a business income of 6 lakhs instead. Earlier, he was saying business loss is 5 lakhs. Updated return cannot be a loss return. But if earlier return was loss return, updated return can be an income return, I told you. That was my first situation, right? The updated return cannot increase the loss, cannot decrease the loss, but it can only be an income return. That is what the assessee is doing. He is wanting to declare now an income of 6 lakh rupees. Okay, but listen to the problem. Practically, you imagine. For 21-22, he had filed the return. He had said 5 lakhs loss. That loss was not absorbed. So you would have carried this loss forward to the next year, which is 22-23. So 222-23 brought forward business loss would be 5 lakhs, which might have been adjusted in this year. But what are you doing? On 1st November 2024, you are making a change to 22-23's return. Are you understanding the problem that is arising? See, in 21-22, you had declared a business loss of 5 lakhs, which you carried forward to 22-23. Now, previous year 22-23, assessment year 23-24, 5th July 2024, you have filed the return. In that return, you would have considered the brought forward business loss also. Now, the same year's return, you are filing updated return on 1st November 2024. So don't you think now even this return has to be changed? Even this return has to be changed, guys, the return which you filed for this year, because this year's return would have wrongly considered the brought forward business loss of 5 lakhs. So for this year, you have no choice. You have to file an updated return only. For this year, you have no choice. You're understanding? Because of filing an updated return, I'm filing an updated return for this year. Because of this year's updated return, if next year's loss is brought forward, unabsorbed depreciation brought forward and all is getting affected, then for those years, you have no choice. You have to file updated return only. 139.8A return only you have to file. You understood? I'll repeat again. Listen, just in case there was a gap in your understanding, please listen once again. For 21-22, assessment year 22-23, I had already filed the return declaring loss. But 139.5 revision time limit is over. After that, now I want to revise the return. I have no choice, updated return only. Situation 2, remember the second situation where I filed the return but I want to revise, revision time limit is over. Now 139.8A only I have an option. So under 139.8A on 1st November 2024, within 24 months from the end of the assessment year, assessee is filing an updated return. Earlier return was loss return, updated return is an income return. This is allowed. Updated return should not be a loss return. Yes, it's an income return. I am declaring income of 6 lakhs. But 21-22's loss of 5 lakhs would have been carried forward to 22-23. And previous year 22-23's return is already filed by the assessee even before doing this updation. On 5th July 2024 itself, he has filed the return, let us say. So this return of this year would have wrongly considered this loss. So even this year we have to rectify. So because of filing updated return, if subsequent years losses have to be rectified. Because of filing updated return, if carried forward loss, unabsorbed depreciation of subsequent years has to be rectified, then for the subsequent years you have no choice. You have to file updated return only. Understood perfectly? So this was another point under updated return. Alright, now listen. There are some situations where you cannot file an updated return. Situation number 1, where you have already filed updated return. See, once you file an updated return, it is final. You cannot revise an updated return. For 21-22 assessment year, if you have filed updated return, again you cannot file an updated return for the same year. In simple words, updated return cannot be revised. It cannot be further revised. Alright guys, situation number 1. Situation number 2, if the income tax department, if the AO has already completed your assessment, if your assessment is already over, now don't confuse them by again filing updated return. Alright, or if you belong to such class of persons which CBDT has notified. CBDT has notified a list of persons who cannot file updated return, but that is not a part of your RCA inter-syllabus. You will be learning it in CA final. So in these 3 cases, you cannot file updated return. So summarizing our learning on 139.8A till here, listen. First of all, when do you file 139.8A return? Situation number 1. Neither you filed the return on time, nor did you file the return within 139.4 belated return time limit also. After that, you want to file the income tax return, no option, come to 139.8A, you will get time up to 24 months from the end of the assessment year. Second situation, you already filed the return, but you want to revise. But revision time limit under 139.5 is over. After that, you want to revise, come to 139.8A. Okay, these are the 2 situations when you will file 139.8A return. Now, what are the situations when I will not allow 139.8A? 139.8A return, updated return cannot be a loss return. Number 2, because of updated return, your refund should not increase. Number 3, because of updated return, your tax liability cannot reduce. Your tax liability cannot reduce. Okay. Number 4, you filed updated return. Because of that, subsequent years loss is brought forward. Subsequent years unabsorbed depreciation carry forward and all has to be changed. For the subsequent years, no option. You have to file updated return only. Situation number 5, the AO has already completed your assessment. Now you cannot file updated return. And the last point, once you file an updated return, it is final. You cannot revise it again. Updated return cannot be again and again updated. It cannot be again and again revised. Okay, now till here, if you have understood, the concept is over. Now we have to do some computation questions to understand that how will you pay tax under updated return. There is actually a little more theory, okay? Section 140B, additional tax and all we have a little bit more under updated return, but this remaining part I will discuss with you. I'll help you understand through a question. Alright, so let us take up a question. It might take us, quite some time. You may need a calculator as well. So please keep one in handy. Let us discuss. But please proceed with this part of the discussion only if you're thorough with whatever we have learned till here. Updated return can't be a loss return. Because of updated return, refund cannot increase, tax liability cannot reduce. Updated return cannot be updated, cannot be revised again and again. Updated return cannot be a loss return. Okay, and then also remember we discussed because you filed updated return, subsequent years loss carried forward, subsequent years unabsorbed depreciation on is getting affected. For those subsequent years, you don't have a choice, you have to file updated return. Okay, keep all these points in mind, and now let's begin with the question. See, I'll put down the question for you over here. Let us say our assessee is an individual. Okay, I'm talking about previous year 22-23. That is, I'm talking about assessment year 23-24. For this year, our assessee did not file the income tax return at all. Neither on time nor belated return. He did not even file the return. Which means I'm talking about the first situation, guys. Okay, he did not file the income tax return at all. Now, 139.1 due date for this assessee was 31st July 2023, let us say. Now, on 10th November 2024, now he wants to submit income tax return. See, what will be the last date to file belated return? 31st December of the assessment year, 3 months before the end of the assessment year. He has time till 31st December 2023 to file the late return. On time will be 31st July 2023. Unable to file till 31st July 2023, late return you have time till 31st December 2023. But he neither filed on time nor he filed within this date. Now on 10th November 2024, after 139.4 due date, now he wants to file income tax return. We will tell him you don't have a choice now. You have to file only under section 139.8A. Okay, now listen, how will the computation be? What is his total income? Let us say his total income was 49, or let us say it was 45 lakh 52,000, his total income, and he had already paid advance tax on 1st March 2023. He paid advance tax of 4 lakh 30,000, let us say, and he has TDS and TCS credit also with him, and that is, let us say, another 70,000. This is the information. Okay, so he neither filed his income tax return on time nor did he file belated return. After belated return date, now on 10th November 2024, he wants to file his return. Total income is 45 lakh 52,000. During the previous year itself, he had paid advance tax of 4 lakh 30,000. TDS TCS credit in his name is 70,000. Okay, now how will we calculate? See, first of all, we will calculate his tax liability. Okay, so what is he going to file? He is going to file section 139.8A return. Now in that return, he is going to declare an income of how much? 45 lakh 52,000. He is not filing a loss return, he is filing an income return only. He is declaring an income of 45 lakh 52,000. Now first of all, on this income, what will be his tax liability? How do we calculate tax? He's an individual, guys. So first of all, we will calculate basic tax. He is not a senior citizen and all. Income is more than 10 lakh. So 1 lakh 12,500 plus 30% of his income, 30% of his income in excess of 10 lakhs. Right? This is how you will calculate his basic tax. 1 lakh 12,500, which is a tax up to 10 lakh income. Above 10 lakh, whatever income he had earned, 30% of that. How much will this be? Calculate. Please do the calculations along with me, okay? Don't just listen to the session. Work it out along with me. Take a pen, take a paper, take a calculator and work it out along with me. Only then will it be effective. So the tax on this is how much? 11,78,100. This is a basic tax. Now, after this, what do we think about? We think about 87A rebate. But obviously, no 87A rebate over here because the total income of the assessee is way more than 5 lakhs. Then after this, we think about surcharge. There will not be any surcharge because assessee's total income is within 50 lakhs. Only if the individual's income is more than 50 lakhs, surcharge is applicable. Because no surcharge, there will be no marginal relief also. So total tax as of now is 11,78,100. To this, if I add 4% cess, that is going to be 47,124. So the total tax of my assessee will be 12,25,224, and you know very well tax has to be rounded off to the nearest 10, which will be 12,25,220. Till here understood? Nothing much I did. I just calculated his tax liability. But wait, even before rounding off, assessee has advanced tax, assessee paid advanced tax, assessee paid TDS, TCS credit and all. Will enjoy all that, right? So he has TDS plus TCS credit of how much? Of 70,000, and he had also paid some advanced tax during the year. So what is the net number here? First of all, the net number here is 11,55,224. You know, we call this as assessed tax, right? And from this, I'll subtract the advanced tax which he has paid. He paid 4,30,000 as advanced tax, which is going to be 7,25,224. So this is the amount of tax which he has to pay. Alright, wait, rounding off and all, we'll do a little later. Till here you understood? Nothing special I did. Assessee's total income is 45,52,000. On that income, I first computed his basic tax. Then there was no rebate, no surcharge, no marginal relief. So I added cess. Then I enjoyed the TDS, TCS credit and the advance tax paid. So what is his liability now? His liability is 1 lakh, his liability is 7,25,224. Now listen, he's filing his income tax return late. 234A interest will get attracted. If he has paid lesser advance tax, 234B interest will get attracted. Only one installment he has paid advance tax. Only on 31st, only on 1st of March 2023, he paid advance tax. He did not pay quarterly installments. So 34C interest will also get attracted. So all of that I'll have to add over here, right? So as of now, he has to pay 7,25,224, but I will add interest under 234A. I'll add interest under 234B and 234C. Why will I add 234A interest, guys? Please remember, 234A interest is because you did not file your income tax return on time. See, what was the due date? When should the assessee have filed the income tax return? Income tax due date was 31st July 2023. But when is my assessee filing his income tax return? Only on 10th November 2024, he is filing the updated return, the income tax return. So what is the period of delay? Period of delay, I will say, is from 1st August 2023 till 10th November 2024, guys. Because his due date was what? His due date was 31st July 2023. So his delay is from 1st August till 10th November. How long is this? How many months is this going to be? This is going to be around August, September, October, November, around 16 months. So for these 16 months, he will have to pay interest. Now, whenever you calculate 234 ABC interest, always remove the fraction and round off to the earlier 100. So 7,25,224, I will ignore 24 and I will round off to the earlier 100. Always remember this, guys. 234 ABC, whenever you are calculating, you have to first round off to the earlier 100, then you have to calculate. What is the interest rate? 1% per month. How many months is this going to be? This is going to be 16 months. Even a part of the month, the November is only 10 days in November. Even a part of the month, I will count as full month. So how much is this going to be? This is going to be 1,16,032. 234A interest. I'll repeat again, why am I calculating this? Because assessee has filed his income tax return late. So for the period of delay, he will have to pay 1% interest per month or part thereof, which means even a part of the month I will consider as whole month. And the amount on which we calculate interest always has to be rounded off to 100. See, total income and tax liability, we round off to the nearest 10. But when you're calculating 234 ABC interest, you should round off to the nearest 100, that is always earlier 100. Not next 100. You will always ignore the fraction and round off to the earlier 100. Okay, then will there be 234B interest? We'll have to check. 234B interest comes into the picture when assessee has paid less than 90% of assessed tax as advance tax. See, what is the assessed tax? 11 lakh. Assessed tax is 11,55,224. Did the assessee pay 90% of assessed tax at least? What is 90% of assessed tax? 11,55,224 into 90%. Did he pay 10,39,702? This much at least did he pay as advance tax? No, he has paid only 4,30,000. So the advance tax which he has paid is less than 90% of assessed tax, right? So which means yes, there will be 234B interest. I hope you recall learning all of this, guys. If you've paid advance tax less than 90% of assessed tax, if you had paid this much advance tax, at least we would be happy. 10% relaxation we will give you, 90% at least you should pay. But assessee has paid even less than 90%, 234B interest will apply. Now you see what is a shortfall. How much lesser did he pay? See, he should have paid 11,55,224. He paid only 4,30,000. So how much lesser did he pay? 7,25,224. So on this, but I told you whenever you calculate 234 ABC interest, round off to the earlier 100. So 7,25,200 into 1%. But for what period? 234B interest will start at the beginning of the assessment year always. So 1st April 2023 till when are you paying tax now? When are you filing the return now? 10th November 2024. How long is this period? This is going to be how long? 23 to 24, 1 year. And then April, May, June, July, August, September, October, November, 8 months after that. So 12 months plus 8 months, this is going to be 20 months. So for 20 months, this is going to be how much? 7,25,200 into 1% into 20, 1,45,040. Understanding 234A interest is for filing the return late. So from the due date, okay, for the period of delay, I will calculate 234A interest 1% per month. Even 234B interest is 1% per month or part thereof, same 1% only. But how will I calculate 234B interest? Starting from the first day of the assessment year till when are you filing your return, when are you paying your tax? 10th November 2024 for this period, for 20 months. Okay, 234A interest will be calculated on the balance amount of tax which assessee has to pay. 234B interest will be calculated on assessed tax minus advanced tax. What's the difference between the two? Assessed tax minus advanced tax. That is what is the balance amount assessee has to pay on this amount only. Why are we calculating 234B interest? Do not lose track because assessee has paid advance tax less than 90% of assessed tax. Had he paid 90% of assessed tax, I wouldn't have asked him to pay 234B interest. He paid less than 90% of assessed tax. That is why I'm asking him to pay 234B interest. Okay, then after this, he will also have 234C interest. 234C interest now. I'll help you calculate 234C over here, okay? See, 234C is one place where students very often go wrong. Understand the concept. We have 4 installments, guys. First, second, third, and fourth. Okay. When are you supposed to pay the first installment? First installment has to be on or before 15th June of the previous year. Which previous year are we calculating? 22-23. So the first installment has to be by 15th June 2022. Second installment has to be by 15th September 2022. Third installment by 15th December 2022. And last installment by 15th March 2023. First installment, how much are you supposed to pay? 15% of assessed tax you are supposed to pay. 15% of assessed tax is how much? 15% of 11 lakh. 15% of 11,55,000. How much is it? 11,55,224. We're supposed to pay 15% of 11,55,224. So how much are you supposed to pay? 1,73,284 you're supposed to pay. But I'm not even expecting you to pay so much. Did you pay at least 12% of assessed tax? Did you pay at least 12% of assessed tax, which is how much? Did you pay at least 1,38,627? How much advance tax did our assessee pay? He paid nothing. So had he paid at least this much, I wouldn't have asked him to pay any interest under 234C. You're understanding? We are not even expecting him to pay this full amount of 1,73,284. Full 15% we're not even expecting him to pay. Had he paid 12% of assessed tax, we wouldn't have asked him to pay 234C interest. But he paid nothing. He has paid less than 1,38,627. So yes, there will be 234C interest. And how will we calculate? How will we? Same 1%, guys. For 3 months, 3 months, 3 months, 1 month. But on what? What is the amount which he should have paid? He should have paid 1,73,284. How much he paid? Zero. So what is the difference? 173,284. But I told you, you will have to calculate by ignoring 100. So by rounding off to earlier 100. So 173,200. On this we will calculate at the rate of 1% for 3 months, which is going to be how much? Which is going to be 5196. There are two very common mistakes which students make. Mistake number 1, 90% of assessed tax they are calculating, right, to check whether 234B interest is applicable or not. Had you paid 90% of assessed tax, I wouldn't have asked you to pay 234B interest. You paid lesser than 90%. So you have to pay 234B interest. But you will pay 234B interest on what? On the total assessed tax minus advanced tax, not on 90% of assessed tax minus advanced tax. So this 90% number you are going to use only to check whether 234B is applicable or not. Now that you concluded 234B is applicable, this number is useless now. You will calculate 234B interest on what? On the difference between assessed tax and advanced tax paid, and not on this 90% number. You will see what is a shortfall, how much lesser you paid. On that you will calculate. 234A interest is because you filed your income tax return late. So on the balance amount of tax you have to calculate. 234B interest is because you paid less than 90% of assessed tax as advanced tax. So on the shortfall, how much you should have paid? You should have paid, you will not say 90%. 90% I will use this number only to conclude whether 234B is applicable or not. I concluded 234B is applicable because we paid advanced tax less than 90% of assessed tax. I concluded 234B is applicable. Now this 90% number is useless. I will pay 234B interest on what? On the shortfall. Okay, so similarly, even 234C, this 12% number is just to check whether 234C interest is applicable or not. What I have paid is lesser than this 12% number. Therefore, 234C interest is applicable. Once I conclude it is applicable, now this number is useless. Are you understanding this? Yes, guys, are we following this? See, I'll repeat this 234C part again. On 15th June, I should have paid 15% of advanced, 15% of assessed tax I should have paid. But how much did I pay? I paid nothing. See, I should have technically paid 15%. But there wouldn't have been 234C interest had I paid 12% at least. We are not even expecting the assessee to pay full 15%. So basically, once you conclude that 234C is applicable, then this number becomes useless. Ideally, you're supposed to pay 15% of assessed tax. You're supposed to pay on in the first installment. You should have paid so much. But to judge whether 234C is applicable or not, I will not use this number. Did you pay 12% at least? Had you paid this much at least, I would be happy. No 234C interest. But no, assessee did not pay 12% also, which means 234C interest applicable. Once I conclude 234C interest is applicable, now this number becomes useless. Now 234C interest I will calculate on what? On what you should have paid minus what you paid. On this difference. And at the same time, I should also remember to round off that difference to 100, earlier 100, ignoring the fraction. Because 234A, B, C are always calculated on multiples of 100, earlier 100. Okay, you'll understand this better as I discuss the second, third and fourth installment with you. Second installment, how much my assessee should have paid? 45% of 11,55,224. 45% of assessed tax he should have paid. So he should have paid totally 51 lakh no, 5,19,851 he should have paid. Basically, first and second put together, he should have paid so much. But I'm not even expecting pay so much. I'm expecting at least 37%. Did you pay at least 37% of assessed tax? Which is how much? 4,27,433. Did you pay so much at least? First and second put together? No. First and second put together, assessee has paid zero, which is less than 4,27,433, which means 234C interest is applicable, guys. Once I conclude 234C interest is applicable, now this number is useless. I will calculate interest on what? On the difference between what I should have paid. I should have paid so much. What did I actually pay? Nothing. So on this difference is 519,851. I will round it off to the earlier 100 on this 1% for 3 months. This is going to be 15,594. I hope you're getting a hang of it now. Now talking about my third installment. Third installment, I should have paid 75% of assessed tax. I should have paid 11,55,224 into 75%, which is going to be 8,66,418 I should have paid. First, second and third put together, I should have paid so much. In the first installment, I was happy if you would have paid 12%. Second installment, I would have been happy had you paid 37%. Third and fourth, you have to pay the same amount only. Did you pay 8,66,418? Assessee has paid 0 plus 0 plus 0. All the three installments put together, he has paid nothing. And therefore, what he has paid is less than 8,66,418. Therefore, 234C interest is applicable. I will ignore this number now. I will see how much you should have paid. 8,66,418 paid minus how much you paid, 0. On this difference, I will calculate 234C. But 234C I should calculate by rounding off to the earlier 100 into 1% into 3. This is going to be 25,992. Okay, then taking you to the last installment. When should I have paid the last installment? On 15th of March 2023. Okay, how much I should have paid? 100% of 11,55,224 I should have paid. That is 11,55,224 we should have paid. Now, in the first installment, at least 12% had you paid, there wouldn't be interest. Second installment, at least 37% you had paid, there would be no interest. Third and fourth, the same 75%, 100% number only will apply. So you should have paid 11,55,224. But how much did you pay all the installments put together? Third installment, before 31st March, you actually paid something. Remember, the assessee had paid 4,30,000 on 1st March 2023. So assessee has paid advance tax 4,30,000 rupees. Total, he has paid 4,30,000 rupees. This 4,30,000 rupees is less than 11,55,224. So therefore, 234C interest is applicable. Now, how will you calculate how much you should have paid? 11,55,224. How much you paid? 4,30,000. So what is the difference? The difference is 7,25,224. On this, I will calculate after ignoring the multiple, after converting it into 100, after ignoring the fraction, converting into earlier 100 into 1%, but only into 1. 3, 3, 3, 1, right? So this is going to be 7,252. So what is the total 234C interest, guys? Total 234C interest is going to be 54,034. So 234C interest 54,034. Understanding? Yes. Is there a mistake? Just give me a moment. See, let me give you a revision. Don't get confused, okay? 234A interest comes into the picture when you file your income tax return late. Okay, so on the balance amount of tax for the period of delay, you will pay 1% interest per month or part thereof. 234B interest comes into the picture when you pay less than 90% of assessed tax as advance tax. When the advance tax that you have paid is less than 90% of assessed tax. Then on the difference, on the shortfall, how much ever lesser you paid, on that lesser amount, 1% per month, you will pay from the starting of the assessment year till when are you filing your return. Okay, please also remember 90% of assessed tax. I'm going to use this number only to judge whether 234B is applicable or not. Once I conclude it is applicable, after that, that number is useless. 234C interest is applicable because I did not pay my installments properly. Okay, so at least 12% that had I paid in the first installment, there wouldn't have been any 234C interest obligation. I paid less than 12%, which means 234C will apply. Once I conclude, it will apply. 12% number is irrelevant now. The difference between what I should have paid and what I actually paid, on this difference I will calculate for 3 months, 3 months, 3 months and 1 month. Second installment, 37% at least had I paid, there wouldn't be 234C interest liability. Third and fourth, same 7,500 only. Okay, so totally how much money do I have to pay under tax in the form of tax? 7,25,224. This is 234A interest, 234B interest and 234C interest. Now listen, I need some more space. So what I'll do this, I'll put it over here. Listen. So in addition to all this, my assessee will also have to pay 234F fees. Isn't it? Because he's filing his income tax return late. If his total income is up to 5 lakhs, he has to pay 1,000 rupees fees only. If his total income is more than 5 lakhs, he has to pay 5,000 fees. His total income is way more than 5 lakhs. So how much fees he has to pay? 5,000 fees. So for filing income tax return late, two implications are attracted: 234A interest and 234F fees. Both are applicable because you filed your income tax return late. Alright, how much 234F fees do you pay? If your total income was up to 5 lakhs, you would have paid 1,000. If total income is more than 5 lakhs, you will pay 5,000. Your total income is more than 5 lakhs, so 5,000 fees we will pay. So because I did not file my income tax return late, because I filed my income tax return late, I'll have 234A interest and 234F fees. 234B interest is because I paid advance tax less than 90% of assessed tax. 234C interest is because I did not pay installments properly. So if I add up all of this, how much do I have to pay? 7,25,224 plus 116,032 plus 145,040 plus 54,034 plus 5,000. This adds up to 10,45,330. Okay, this is what I would have paid ideally. But listen, under section 140B, you have to pay some additional tax also. Why? This is the new concept which I had not discussed with you when I was discussing about updated return. Updated return, you know, assessee did not file the return at all, or he filed the return but he wants to revise, time to revise is over. So 24 months from the end of the assessment year, till then he has time to file updated return. Updated return he cannot update again. Updated return cannot be loss return. Because of updated return, he cannot reduce his tax liability, he cannot increase his refund. Updated return he cannot file if he has already if the AO has already completed assessment. All these concepts you know. But one more concept was left. If you are filing updated return, you will have to pay additional tax. How much additional tax you will have to pay? Sometimes 25%, sometimes 50%. See, from the end of the assessment year, you're going to get 24 months time to file the updated return, right? If you're filing the updated return within 12 months, okay, then you will have to pay 25% additional tax. But if you're going to file after 12 months, but obviously within 12 months because your time limit is maximum 12 months, in this period if you're going to file, you will have to pay additional tax 50%. Understanding? From the end of the assessment year, within 12 months if you file, then you will have to pay 25%. After 12 months, but within 24 months if you file, you will have to pay 50%. Now here, see, when is our assessee filing the updated return? What is the end of the assessment year, guys? 31st March 2024. Assessee has time 24 months. Assessee has time till 31st March 2026. If by 31st March 2025 assessee is filing updated return within 12 months, here 25%. But if our assessee is filing after 31st March 25, then 50%. When is our assessee filing? On 10th November 2024. Yes, he is filing in this period. So what will be the additional tax? 25%. He is filing the updated return within 12 months from the end of the assessment year, hence 25%. Had he filed in the next 12 months, he would have had to pay 50%. He is filing the updated return on 10th November 2024, which is within 12 months from the end of the year, within 12 months from the end of the assessment year, hence the additional tax rate will be 25%. But the question is 25% of what? 25% of the total amount which you have to pay, tax plus interest, everything put together, just excluding the fees. To a percentage of what, guys? Everything put together, just excluding the fees. So total how much you have to pay? You have to pay 10,45,330, right? Minus the fees. On fees alone, you don't have to pay additional tax. You have to pay additional tax on what? On tax plus interest. So from the tax plus interest, this was the total amount I have to pay, right? From this, I will ignore the fees component. So I'll get 10,40,330. On that 25%, that's going to be how much? 2,60,083. So this is the amount of additional tax I'll have to pay. Total amount that I will have to pay will be 10,45,330 plus the additional tax 13,05,413. This I will round off to the nearest 10, 13,04,10. Did you understand this? So this question, why did we work out? Majorly to teach you about additional tax. But this we could have finished in 1 minute itself. But then I also wanted to give you a revision of 234 ABC. This is one part, very, very neglected part. I hope at least now you're feeling a little better. But listen, we will not stop here. One more question we will work out. Why? This question is only about a situation where assessee did not even file income tax return. But remember, I told you 139(8)(a) can apply in two situations. First situation, when he did not even file the income tax return. Second situation, where he filed, but he wants to revise. Time to revise is over. So the second situation, we are going to see now in another question. Okay, if you're too tired, you pause the video here, you take a 5 minutes pause and come back. If you're comfortable, continue watching. Listen, let me tell you what the question is, what the situation is. Again, we are talking about previous year 22-23, assessment year 23-24. Okay. For this year, let us say the 139(1) due date, which was applicable for our assessee, was 31st July 2023. Okay. And how much time do you have to file late return? Late return is till 31st December of the assessment year, 3 months before the end of the assessment year. You have time till 31st December 2023. Assessee actually filed income tax return on 2nd November 2023, which means assessee has filed a late return, assessee has filed a belated return within 31st December 2023 with after 139(1) due date, but within the late return due date, assessee has filed, late return assessee has filed. Okay, now in this late return, assessee had said, a little bit of income and a little bit of tax assessee had declared. In this return, assessee had said that his total income is same, 45,52,000, let us say, and he had paid advance tax on 1st March 2023, same thing like the last question. He had paid 4,30,000 and his TCS credit was, let us say, 70,000, same like the last question. 2nd November 2023, late return he had filed. Now, later on, the assessee realized that he forgot to put 15 lakhs income in the return. He forgot to mention this in the return. And when is he realizing this? Only on 10th November 2024. He can revise the return under 139 subsection 5, but time to revise the return is only till 31st December 2023, guys. Only till 3 months before the end of the assessment year. But he realized the mistake after this date. So he has no choice now. He will file 139(8)(a) return only. You're understanding? 139.5, he wants to file revised return, but revised return time limit is over. After this date, now in 2024, he's realizing that he, should have declared 15 lakhs more income. Now revision time is over. He has no choice. He has to file updated return. Now, to file updated return, how much time does he have to file updated return? He has time 24 months from the end of the assessment year. End of the assessment year is 31st March 2024. From here, 12 months. He has time till 31st March 2026. Yes, well within 31st March 2026. On 10th November 2024, he wants to file updated return. It is within the time limit. So yes, an assessee can file updated return under 139.80. Now, what will happen? How will the computations be? Listen to me. For a moment, we will ignore this part. Okay, and according to the existing information, according to this ITR, we will see how much interest, how much tax, how much fees assessee has paid. Ignoring the revision, existing ITR, assessee has already filed ITR, right? Late, but assessee has filed ITR. Belated return, but assessee has filed. So on the basis of the belated return, let us see how much tax and interest assessee would have already paid. We said that total income of the assessee, according to the ITR which he has already filed, the total income on that basis is 45,52,000. Okay, so on this, what is the basic tax? Just like how I calculated in the last question for you, up to 10 lakhs, you will have to pay 1,12,500 plus 30% of your income in excess of 10 lakhs, right? Same thing like the last question, guys. This is going to be how much? This will be 11,78,100. Then there will be no 87A rebate because assessee's income is more than 5 lakhs. There will be no surcharge because assessee's income is not more than 50 lakhs. There will be no marginal relief also. So the total tax as of now is 11,78,100. To this we will add a cess of 4%, which is going to be 47,124, resulting in total tax of 12,25,224. But not only will the assessee have to pay tax, assessee will have to pay 234 ABC interest also. Why 234A interest? Clearly, assessee has filed income tax return late. This question, you should feel a little bit more comfortable than the last question because 234 ABC interest you now know, right? So as of now, 12,25,224 he has to pay. But how much 234A interest he would have paid? I'm talking about the existing return which he has filed. What was the due date, guys? The due date was 31st July 2023 and he's filing on 2nd November 2023. So what is the period of delay? 1st August 2023 till 2nd November 2023. This is the period of delay. How many months is this? This is going to be some 4 months, guys. August, September, October, November, 4 months. So on what amount will you calculate interest? Before calculating interest, shouldn't we consider TDS, TCS, advanced tax and all, because all that is already paid. So he already paid TDS, TCS credit that he already has is 70,000. So what is his assessed tax? His assessed tax will be 11,55,224. He also paid advance tax already 4,30,000. So what is the tax which is due for him? 7,25,224 is due for him. So 234A interest, how will you calculate? 7,25,224. But before calculating interest, round off to 100, earlier 100. 7,25,200 into 1% into how many months? August, September, October, November, 4 months. Even a part of the month we will count as whole month, right? So 7,25,200 into 1% into 4, 29,008. This much 234A interest he will have to pay. Then does he have to pay 234B interest? We will have to check. How much you should have paid? At least 90% of assessed tax if you had paid, we would not have asked you to pay any advance tax. 90% of assessed tax is how much? 11,55,224. This is the assessed tax. 90% of this will be how much? 90% would be 10,39,702. Did he pay so much at least? No, advance tax that he paid was only 4,30,000. So the advance tax paid by our assessee is less than 90% of assessed tax. So sorry, assessee, you will have to pay 234B interest. Once I conclude you have to pay 234B interest, this number is now irrelevant. 90% number is now irrelevant. How will I calculate 234B interest? On the shortfall. You should have paid 11 lakh 55 to 24. You paid only 4 lakh 30. Shortfall is 7 lakh 25 to 24. On this we will have to calculate interest, but after rounding it off to earlier 100 into 1% into how long? From the first day of the assessment year, that is from 1st April 2023 till when is he filing the return? 2nd November 2023, which is going to be how many months, guys? April, May, June, July, August, September, October, November. 8 months. Are you understanding this? 234B interest, why am I asking the assessee to pay? Because he's paying less than 90% of assessed tax as advance tax. Advance tax paid is less than 90% of the assessed tax. So yes, he will have to pay 234B interest. 234B interest, once we conclude that it is applicable, now I will ignore the 90% number. I will see the shortfall. On this shortfall 1% from the beginning of the year till when he is filing the return. This is going to be how much? This is going to be 58,016. Okay, then coming to 234C interest. 234C interest will be the same like what we had calculated earlier, or will it be different? No, it will be different. Listen. No, actually 234C interest will be the same, right? Because all the numbers are the same as the last question. As in, at least all these numbers are the same, right? We are right now calculating what the tax would have been, what the interest would have been for this return that he has filed. Here the numbers are same like what we did in the last question. Let us not spend time calculating 234C again. 234C interest will be the same, which will be 54,034. Okay, here again I will ask him to pay 234F fees because he has filed his income tax return late and his total income is more than 5 lakhs. So I will ask him to pay 5,000 fees. Okay, so as of now, total, how much amount would the assessee have paid? He would have paid totally 8 lakh 71,282. Okay, but because he is fine, no updated return. As of now, I'm talking about the existing return, right? So in the existing return, this was his balance. What is happening? So in the earlier return which he has already filed, in the late return which he has already filed, his tax due was so much, 7,25,224, and this much interest he would have paid, 5,000 fees he would have paid. So total amount he would have paid would have been 8,71,282. Obviously, he would have paid this amount only after rounding off. So he would have paid 8,71,280 he would have paid. All right, so this was just the existing calculation. According to the income tax return which he has filed, the late return which he has filed, under this ITR, he would have paid 8,71,280. But now what is he doing? On 10th November 2024, he wants to file an updated return and he wants to declare 15 lakhs more income. Updated return, can he file? Yes. He has already filed the return. Time for revision is over. Now he wants to declare 15 lakh more income. He has no other option. He cannot file revised return. He has to file updated return only. Okay, updated return time is 24 months from the end of the assessment year. And yes, we are within 24 months. On 10th November 2024 itself, he wants to file the updated return. All conditions are fulfilled. You can file 15 lakhs more income he wants to declare. So now his revised income will be how much? Already he had declared 45 lakh 52,000. 15 lakhs more he wants to declare. So his revised income will now become 60 lakh 52,000. So now what will he do? Listen to me carefully. What is his revised total income? 60 lakh 52,000. On this, what will be the basic tax? We'll go step by step. What will be the basic tax on this? We will again recalculate. See, this much he has already paid. We will keep that in mind, but we will recalculate the entire thing. 60,52,000 is his total income. What will be the basic tax on this? 1,12,500 plus 30% of this income in excess of 10 lakhs. This is going to be how much? This is going to be 16,28,100, guys. Right? This is going to be the tax on the updated income. Now, there will be no rebate under 87A because total income is more than 5 lakhs. But he will have surcharge because the total income is more than 50 lakhs. More than 50 lakhs up to 1 crore, how do you pay surcharge? 10% of income tax. So 1,62,810 will be surcharge. If you compute marginal relief, you can compute and see there will be no marginal relief. The increase in income will be much more than increase in tax. There will be no marginal relief. So if you add up as of now, this is going to be 17,90,910. Okay, then to this he will also add cess at the rate of 4%, which is going to be 71,636. So resulting in a total tax liability of 18,62,546. Okay, but listen, he had already enjoyed TDS TCS credit, guys. I'm recomputing according to updated income. I'm recomputing. TDS TCS credit was 70,000. So what was his assessed tax? His assessed tax would have been 17,92,546. He had also paid some advance tax, if you remember. 4,30,000 he had paid as advance tax. So the balance tax would be 13,62,546. Okay, but then he also did pay some tax also earlier. Totally, he had paid 8,71,280 tax. This 8,71,280 had included all this interest, this fees, but it had included this of tax also. So in 8,71,280, how much tax has he already paid? This is called section 148 tax. 148 tax is nothing but your self-assessment tax. This amount, after you subtract TDS, TCS, advanced tax and all, this is called section 140A self-assessment tax. Okay, so section 140A self-assessment tax he has already paid. See, he already paid 8,71,280 under the original return, right? That had included self-assessment tax of 7,25,224. So he has already paid 7,25,224. So how much more section 148 tax, how much more he has to pay? We are understanding how much more self-assessment tax he has to pay. 6,37,322 more he has to pay in the form of self-assessment tax. See, total tax minus TDS TCS credit minus advance tax. This is the tax liability. But why should he pay this much all over again? He has already paid 8,71,280, right? Which includes self-assessment tax of 7,25,224. So after I subtract 7,25,224, self-assessment tax more he has to pay 6,37,322. Okay guys, now after this I will calculate 234A interest. Once we calculate this tax, even in the last two calculations, after this we calculate 234ABC interest, right? Let us do that calculation. Now, why does 234A interest apply? 234A interest applies because you filed your income tax return late. Now see, 234A interest calculation will be slightly different. On what amount do we calculate 234A interest? Generally, we calculate on the amount of tax which is due, right? Amount of tax which is due here is 6,37,322. But in updated return cases, I will compute 234A interest on the amount that is due before the 148 tax that I have already paid. In the original return, I have already paid so much tax. So before this tax, how much have I already paid? How much is due? 13,62,546. On this amount, I will calculate. Basically, 18,62,546 is the tax as per the updated return. I have already paid 70,430. 13,62 is due. Without considering the 148 tax which I have already paid under the original return, without considering this number, on this number I will calculate at 1% for how many months when I should have filed. What was my due date? 31st July 2023. So 1st August 2023 onwards, till when am I filing the updated return? I am filing the updated return only on 10th November 2024. This is going to be how long? This is going to roughly work out to a delay of around how many months, guys? It's going to be pretty. This is going to be roughly 16 months. But listen, we will not calculate for this period. 234A interest will be slightly different. 234A interest you will calculate on this amount from the date on which you should have filed the return till when you filed the original return, not till when you are filing the updated return. Because see, 234A interest applies when you file the return late. Okay. So you will not, you already filed the return on 2nd November 2023. So till this date only, no, you will calculate 234A interest, not till updated return date. You filed the return late. For that, you're paying 234A interest. But I already filed on 2nd November 2023. So till this date only, I will consider. So 1st August 2023 till 2nd November 2023, August, September, October, November, this is going to be 4 months. But this, you know, I will round off to the earlier 100. So 13,62,500 into 1% into 4. This is going to be 54,500. But I have already paid 234A interest under the earlier return. I have already paid 29,008 in the earlier return. So now how much do I have to pay? Only 25,492 I have to pay in the form of 234A interest. Understanding. So see, how do you find 234A interest? You will find on the basis of the tax before considering the 148 tax which you have already paid under the original return. So on this number you will calculate 234A interest. You might feel it is unfair. Why are we not considering this number? It's okay because we are subtracting the 234A interest which we have already paid. This will take into consideration the amount which you had paid under the earlier return. So 234A on the basis of this amount will be 54,500, but you have already paid 29,008 in the earlier return. So in this return now, in the updated return now, you will have to pay the balance 25,492. Then comes our 234B interest. See, what is our assessed tax? Our assessed tax on the basis of the updated return is 7,92,546. Did you pay at least 90% of assessed tax as advance tax? 7,92,546 into 90% is 16,13,291. No, I did not pay so much. I paid only 4,30,000 as advance tax. So because the advance tax which you paid is less than 90% of assessed tax, now 234B interest will apply, guys. Once I conclude it will apply, this 90% number I will forget about. Right, now this 234B interest I will calculate on what? Listen to this. See, what is a shortfall? You should have paid 17,92,546. How much you paid? Only 4,30,000. So what is a shortfall? 13,62,546. Out of 13,62,546, 7,25,224 you already paid, guys, in the original return. When did you pay this? When did you file the original return? On 2nd November 2023, you already paid this. So what was the delay for this amount? From 1st April 2023 till 2nd November 2023, this is going to be how many months? This is going to be April, it's going to be 8 months. So for 8 months, you're going to calculate on this. What is the balance? The balance is 6,37,322. This you are going to pay now when you're going to file the updated return. When are you going to file the updated return? On 10th November 2024. So what is the period for which you will pay interest over here? From 1st April 2023 till 10th November 2024. See, understand guys, 234A interest is for the period of delay in filing the income tax return. 234B will start from 1st April of the assessment year till when are you paying? So 7,25,224 I paid off when I filed the original return itself. So 7,25,224 delay is only this much. But 637,322 I am paying only now when I am filing updated return. So here the delay is how much? Here the delay is around 20 months. So now how will you calculate? 7,25,200 into 1% into 8 months. Here 6,37,300 into 1% into 20 months. So this is going to be totally how much? 7,25,200 into 1% into 8 months will be 58,016. 6,37,300 into 1% into 20 months will be 1,27,460. So the total interest is going to be 58,016 plus 127,460. It's going to be 1,85,476. But I already paid under the old return, under the original return, I have already paid 58,016. So how much more will I now pay? I will pay 1,27,460 only. If you see, it's actually nothing but this number. Yes, but I'm just trying to explain you with the logic. So how much tax will I pay? This is the total tax under the updated return, but this much I have already paid. So I will pay only this much now. 234A interest on the basis of the updated return is 54,500. On the basis of updated return, you will calculate, but you have already paid 29,008. So you will have to pay the balance this much. Please remember 234A, you will calculate on the basis of this number before considering 148 tax. Because 234A interest, you're going to calculate everything. If you see, they are first calculating on the basis of updated return. So then only you will subtract for the amount which you have already paid. Okay, same way 234B, I am first calculating for the on the basis of updated return. Then I will subtract how much ever I already paid. Now coming to section 234C interest. Here we will have to repeat the calculation. What I will do is I will copy paste the same thing, and I'll just make the changes in the relevant places. Otherwise we will end up spending way too much time. Listen. Listen. How do we calculate 234C interest? How much advance tax, how much is the assessed tax? 7,92,546. On this basis, we will calculate, right? So first installment, you should pay 15% of the assessed tax. 15% of 17,92,546. So first installment, you should have paid 2,68,882. This much you should have paid in the first installment. But did you pay at least 12% of assessed tax? Had you paid at least 12% of assessed tax? I will not ask you to pay any 234C interest. 12% will be how much? 2,15,106. Did you pay at least so much? No. Advance tax that you paid is 0. What you paid is less than 2,15,106. What you paid is less than the 12% number. Therefore, 234C interest is applicable. Once I conclude 234C interest is applicable, now this 12% number is not relevant for me. How will I calculate 234C interest, guys? How much you should have paid? 2,68,882. How much you did pay? Nothing at all. So 2,68,882. On this you will calculate interest. After rounding off to the nearest, to the earliest 100, 2,68,800 into 1% into 3 months, right? So this is going to be, I hope now you are able to follow 234C interest, guys. This is going to be 8,064. Okay, then looking at the second installment, 45% of assessed tax you should have paid. 45% of assessed tax is going to be 8,06,646. You should have paid first and second put together. But I'm not even expecting so much. Did you pay at least 37% of assessed tax? 37% is going to be how much? Did you pay at least 6,63,242? No, we paid 0. We paid even less than the 37% number. Therefore, we will have 234C interest. Once I conclude 234C interest is applicable, I will ignore the 37% number. How will I calculate 234C interest, guys? How much I should have paid? 8,06,646. How much I paid? Nothing. So what is the balance? 8,06,646. After rounding off to the earlier 100, 8,06,600 into 1% into 3. So this is going to be 24,198. Okay, then coming to the third installment, you should have paid 75% of the assessed tax. which is going to be 17,92,546 into 75%. You should have paid 13,44,410. Okay, you should have paid 75% only. Here you don't have a lesser number, same 75% number you should have paid. You paid nothing. You did not pay 75% of assessed tax. Therefore, 234C interest is applicable. How will you calculate? How much you should have paid? 13,44,410. How much you paid? Nothing. So what is the balance? 13,44,410 after rounding off to the earlier 100 into 1% into 3. So this is going to be 40,332. Okay. And finally, you were supposed to pay 100% of assessed tax, 17,92,546. You were supposed to pay the full 17,92,546, full 100%. You did pay something. Remember, 4,30,000 assessee had paid. So 4,30,000 only he paid, which is less than the 100% number. So what is a shortfall? He should have paid 17,92,546. He paid only 4,30,000. So the difference is going to be 13,62,546. On this number, we will calculate at the rate of 1% for 1 month. This is, wait, but we have to round off to the earlier 100, no? So 13,62,500 into 1%, this is going to be 13,625. So come on, now add up what is the total 234C interest. 8,064 plus 24,198 plus 40,332 plus 13,625. This comes up to 86,219, guys. But assessee has already paid some 234C interest. In the original return, he has already paid 54,034. Okay, so why should he pay this much again? He has already paid 54,034. So now I will ask him to pay 32,185 234C interest. Okay, then comes 234F piece because he filed his income tax return late. Original return also he filed late, 5,000, but he has already paid 5,000. So I will not ask him to pay again this 5,000. Okay, so now if you see, as of now, how much total tax am I asking the assessee to pay? He was supposed to pay totally this 13,62,546, but he has already paid 7,25,224. So I'm asking him to pay 6,37,322 more of self-assessment tax, 25,492 of 234A interest, 1,27,460 of 234B interest, 32,185 or 234C interest. So total I am asking him to pay 8,22,459. Okay, now whenever you file updated return, you will also have to pay additional tax, guys. Additional tax under section 140B you will have to pay. You are filing the updated return within 12 months from the end of the assessment year, hence 25%. Now 25% of what? 25% of tax plus interest. So you are paying 8,22,459 now. This includes only tax and interest. This is not including any fees. So on 8,22,459, whatever you're paying now, this much has how much? This has how much tax and interest? Full 8,22,459 is tax and interest only. On that 25%, this is going to be 2,05,615. So totally, we will ask our assessee to pay 10,28,074, which we will round off to 10,28,070. Got it? Yes. So this is how your answer would be. See, at the intermediate level, I don't think, okay, they will, ask us this sort of computation. Objective was anyways not to teach you computation. Objective was to give you perfect knowledge in 234 ABC. I am very sure if you've listened to this lecture attentively, 234 ABC at least, your knowledge would have become much, much wider than what it was earlier. Right, guys? Please let me know in the comment section if you if you're still finding it difficult, if you want anything else to be made simpler, all right, if you found it beneficial for you, if you think that this entire amendment series has made some difference to you, please let me know in the comment section. I would really like to know, because I've been spending crazy hours preparing for these amendments video. So some appreciation would really feel nice. All right, because I've been having like really long hours of classes, and after that I've been doing these videos, and it's been taking quite a lot of toll. All right, anyways, I hope you guys understood this entire updated return concept, section 139(8)(a). Additional tax, this you should not forget. Okay, if you're going to file your updated return within 12 months from the end of the year, you have to pay only 25%. But if you're going to file the updated return in the next 12 months, last 12 months, you will have to pay 50% additional tax. And additional tax will always be a percentage of interest and the tax that you're paying. You will not consider fees. Okay, so with this we finally come to an end to our amendments lecture. All right, we will also be putting up the amendments lecture for Companies Act, all right, in 1 or 2 days maybe. But that will not take us too much time, because there aren't too many amendments in Companies Act. All right, so we'll take that up in the next lecture. All right, thank you so much. I hope these sections benefited you all. Thank you guys. Bye-bye.